So we've spent the last year vigorously debating work from home, work from anywhere, remote work, whatever you want to call it, which has big implications for the future demand of office space. I believe that during the course of this year, office space will be the underperformer of the three major commercial property sectors in South Africa, the other two being industrial and retail. I think last year it was probably retail. Retail tenants were affected severely by lockdowns, a lot of them being forced to shut their shops and losing all their income for a number of months. So it was a severe shock to them, whereas office tenants managed to carry on operating in many cases, albeit with their employees from home. So the office market's tenants did a lot better, and I think the office market therefore didn't do as badly as the retail market last year. But I think it pivots this year to the office market being the weak link. Not because the tenant population will necessarily perform the worst, but because of a lack of demand for office space. And I believe that that's in part, because of the success of this forced lockdown experiment and the forced remote work experiment that came with it. Now, firstly, I think we need to make the point that the increased remote work trend has been a multi-decade trend. It's been coming for years, escalating for years, gradually as technology improves. I think if we went back to the 70s and we look at how people probably had to work then, it was before my time, but you didn't have a portable laptop, computers were rare, fax machines were rare, email was non-existent, internet wasn't there wasn't much. If you weren't next to that big filing cabinet with all your important documents in your office at work, you probably couldn't do a hell of a lot. And as time has gone by and as technological advancement has come, so it's become a lot easier for many of us or many future generations of office workers to sit in a coffee shop and work on their laptop using the Wi-Fi, logging onto the server, whatever the case may be, or working from home or working from another office, whatever. It's become a lot more flexible. And so you see statistics coming out of the US suggesting that this long-term trend escalates from just over 3% of workers working remotely back in 2000 to above 5% by 2018, even prior to COVID. So what does COVID do then? I think COVID, a lot of the technology that we use now, the Zoom and the Teams, was in place before the lockdowns. But a lot of us resist it. We don't change our habits. We ignore it. We carry on driving to physical meetings, commuting to the office. That was the habit. That's how we did things. And humans are, many of them, creatures of habit. And what the lockdown did was it forced us to embrace the technologies that existed, forced us to try our hand at remote work, working via these applications. And for many of us, it was a pleasant surprise as to how successful it actually was. Not that we want to do it full time, all of us. There are many that argue that you need to build human relationships through interacting in an office environment with each other in the same physical space. The company culture suffers, some would argue, through full-time online work. And so there are those human issues which haven't quite been overcome using technology full-time. And so that's the argument in favor of returning to the office in some form. But I think that the potential benefits from remote work, at least a bigger part of the time, are huge as well. So you just think of the cost savings in commuting for staff, in commuting through the day to meetings, the time savings, which can increase productivity through not driving through crowded cities for a couple hours a day, whether it's to physical meetings or to work, commuting through traffic in the mornings. So those potential benefits are huge. And then, of course, there's if one looks at from a company point of view, the potential cost savings of having less office space. Not necessarily doing away with it, but having less office space and an increased portion of people's time being remote work. So you don't have to have as many hot desks or meeting rooms or whatever the case may be. So I think that what this forced lockdown experiment has done, it's forced many of us onto the technology and to try our hand at remote working where previously we wouldn't have. and we've seen benefits of it, whether we do it full time in future or an increased portion of our time. That will differ between individuals and between companies, but I do believe that the long-term trend towards greater levels of remote work has received a boost through this forced lockdown in 2020, and that the trend will speed up, and that many companies will, in the coming year, 2, 3, as leases come up for renewal, or as buildings get sold off, reduce their amount of office space that they require. They will require less, and that's a dampener on the office market. But let's look at not what I say, but what other evidence coming out says. It's the FNB Property Broker Survey, for instance, published a number of weeks ago, yet again for the fourth quarter survey, pointed to 44% of brokers perceiving companies to be revising their office space needs and planning some sort of downscaling, while only 4% pointed to companies generally increasing their office space needs. There will be some. Social distancing requirements might persuade some to take on more. But the majority pointed more towards, the bias was strongly in favor of downscaling, and COVID-19 and lockdown impacts and the remote work impact being a very significant contributor to that. So that seems to be where our surveys say the office market is heading at the moment. That's what brokers experience on the ground through their interactions with the market. The SAPOA office vacancy survey had been on a broadly rising trend for a few years because of to a certain degree because of a stagnating economy and a lack of employment growth, I guess, in the finance, real estate and business services sector. But that trend got a bump up. You saw an acceleration in recent quarters after lockdown had started last year. And I believe that too points towards the increased popularity of remote work for a greater portion of your labor force, or a greater portion of their time, and cost saving to be had from cutting down on office space needs. It's important not to forget the pure economic impact though. We've focused a lot on the remote work impact, but there's an economic impact as well. The finance, real estate and business services sector is the key driver of office demand. Not its GDP, but its employment trends. And those during the course of lockdown quarters 2 and 3, the second quarter and third quarter of last year, we saw roughly 7% year-on-year drops in employment numbers in that sector. That's very significant. And when employment numbers drop with something of a lag, you see a reduction in office demand in the sector. So it's the economic impact as well, which drives my views that the office market during the course of this year will be the underperformer of the 3 major commercial property sectors in South Africa.